Hello everyone, and welcome to NetDiligence Virtual Cyber Risk Summit. My name is Heather Osborne, and I'm the Director of Global Events and Programming here at NetDiligence, a cyber assessment and data breach services company. We are pleased to extend our thought-leading content into the virtual space with this webinar series. Visit the conferences page on our website, www.netdiligence.com, to find out more about our online and in-person programs. Before we begin today, I'd like to extend our gratitude to our virtual cyber risk sponsors and our nearly 100 industry-leading speakers, without whom this program would not be possible. For today's webinar, we will be using the ON24 platform. Right now, you should be viewing the ON24 dashboard, which shows the live viewing screen and other features. During this presentation, all participants will be in listen mode only. Today's presentation will last approximately 60 minutes. Panelists will be taking your questions throughout the presentation. Simply type in your question and hit Submit. You may also use this feature for technical questions. In the bottom corner, you will see a widget called Resources, where you can download assets our presenters and sponsors have provided. Just click on the resource and it will be automatically downloaded. If you are interested in receiving CLE or CE credit for today's webcast, please navigate to the CLE CE box in the lower right-hand corner to make your selection. This will ensure that you are emailed the CLE CE questionnaire to complete your application for credit. Additionally, please note that you must remain online for the duration of the program and answer the 3 polling questions that appear during the presentation. As a reminder, this webcast is being recorded. Following the conclusion of this webcast, you will be sent an archive link for further viewing or sharing with colleagues. This webinar will also be available on demand on our website. Again, thank you for joining us here at NetDiligence today. We hope you enjoy the program.
Good morning, everyone, and welcome to the NetDiligence Claims and Losses panel, intended to be offered in person from beautiful Santa Monica, but instead in true 2020 fashion. Mark and I are joining you separately from Pennsylvania. Simon and Kim are joining us separately from New York, and Luke is joining us from London. And today we are going to cover claims and loss trends and statistics for 2020. We still have about 3 months left, but boy, oh boy, what a year it has been already. So before we dive into the first polling question and the content, let me introduce myself and our esteemed panel. I'm Jennifer Coughlin with the law firm of Mullen Coughlin. We are a mid-sized national law firm, currently 66 attorneys strong and growing, that does nothing but counsel organizations in the context of data privacy prior to an event to best prepare for the inevitable, during the investigation and response to a data privacy event, and after an event when litigation and regulatory investigations occur. Mark Gresiger is the leader of NetDiligence, a cyber risk assessment and data breach services company, and has been since its inception in 2001. Mark and NetDiligence creates and provides highly focused services used by leading cyber liability insurers in the US and the UK to support both loss control and education objectives, including quiet audit, cyber risk assessments, eRisk Hub, and Breach Plan Connect. NetDiligence also publishes an annual cyber claims study and hosts annual cyber risk conferences. Luke Johnson is the Cyber Claims Manager for Canopius. Luke took this position in January 2017, and since then has redesigned the cyber claims service for Canopius-backed policies. He works closely with the innovative underwriting team to create new dynamic cyber insurance products and manages a highly skilled claims team looking after a wide mix of claims impacting organizations of all sizes, from SMEs to global institutions. For over 20 years as a forensic accountant, Simon Oddy has honed his skills on quantifying large, complex losses in insurance, fraud, liability, and cyber claims cases around the globe. Simon works with insurance professionals to help articulate the cyber insurance market and forecast future impacts of cyber losses on businesses. He is often involved in leading conversations to innovate cyber risk insurance policies and product recall claims handling. His insurance work has also included quantifying property, casualty, liability, and crisis management losses. And last but certainly not least, we have Kim Horn. Kim Horn is the Global Claims Team Leader for Cyber and Tech Claims at Beazley. Kim has significant experience in data privacy and cybersecurity matters, including guiding insurers through immediate and comprehensive responses to data breaches and network intrusions. Kim also has extensive experience managing class action litigation, regulatory investigations, and PCI negotiations arising out of privacy breaches. So we are going to kick it off with the first poll question, and the question is, NetDiligence has been producing the NetDiligence Cyber Claims Study for how many years? And the options are 10 years, 5 years, or 2 years. Okay, on to the agenda. Again, we are going to provide you information today on 2020 cyber claims and loss trends and statistics, including trends in events and preparation. And we're going to start the conversation with Mark Gresiger, who's going to present his 2020 claims study to us.
Thank you, Jen, and good morning, everybody. I want to first off say thank you to all the cyber insurance companies who participate in this study with us each year and contributed data for this study for learning's sake. We are very grateful, and to RSM for sponsoring this to make the publication happen. So I'll dive right into this. 2020, folks, the actual physical report for this that you'll be seeing here today will be coming out in a couple weeks. We'll have a public version, and there will also be a private version, partner version inside your eRisk Hub portal with deeper information. It's about 80 pages long. My goal today is just to give you a glimpse of some of our findings. New claims, about 1,600 new claims were submitted. We always give you a glimpse of the most recent year, the 2020 year, but we also do a backwards-looking 5-year in our analysis. So you can see how the years line up here on the right-hand side, just a little bit of pie chart to spread. This is very much an SME study, even though we do have some large company claims here. As you can see from the pie chart in the upper left, this is very much about Main Street companies as opposed to Wall Street companies. 98% of the events involved in SME. We define that less than $2 billion in revenues, but the average was about $92 million in revenue. Large companies, a very different picture. The average is about $8 billion in revenue. For SMEs, on the right-hand side, in the most recent year, or 2019 year, looking at all the 1,600 claims, the average SME event, client claims event, was $123,000. There are crisis costs involved in that, and we included that in the blue bar chart right below that. So in 2019, that was $78,000 for the crisis service component alone. If we looked at the 5-year picture of all our data the past 5 years, that actually crept up for an SME to $175,000. Obviously, large companies, much different story here. Almost $20 million average cyber event in 2019. And if we looked at the 5-year window, it dropped significantly to about $9 million. So clearly this past year, there's been a lot of large events driving up the average. I know my fellow panelists will be talking about how ransomware claims and things like that have gone off the charts. Our legal components to all this, my good friend Jen Coughlin will be talking a lot about this along the way she's moderating. But SMEs, the average legal costs that they saw in handling these data breach and ransomware type events was about $83,000, and for large organizations, it was $1.5 million. I want to give you a quick glimpse on ransomware because, we'll be talking about this throughout this panel. There's been significant change this past year. You can see the orange bar charts. That's the actual ransomware payments. So, for example, Bitcoin more than doubled this past year between 2018 and 2019 from $72,000 to $175,000. The all-in cost is represented there in the purple. 2019 more than tripled this past year to $275,000 all in to handle the ransomware event. We are tracking some of the sector costs on the right-hand side there. Some of the leaders, no surprises here. It's, retail, professional services, healthcare, manufacturing leading the pack by a pretty large margin there, $490,000. I wanted to mention a little bit about business interruption impacting SMEs as well as business email compromise. So 2019, business interruption, the average for an SME was $339,000. And if we looked at the 5-year window, 2015 to 2019, it was up significantly to $435,000. This is, again, representative of over 1,600 claims, so it's a pretty large population. Business email compromise, and we'll get into the facts here. This is simply, many times, Office 365 emails being taken over, then bad guy threat actor masquerading as the CEO, duping, some staffer into paying, for example, a fake invoice or something along those lines, and so it's wire transfer fraud to some extent. In 2019, the average business email compromise was $101,000 facing an SME. If we looked at that 5-year window, 2015 and 19, $132,000. Quick slide on criminal versus non-criminal. There's always a heavy cyber criminal component to these claim events. This past year is very much similar to what it was in 2017 and actually came down from 2016. It's at 71% of the events involve some kind of criminal component, as opposed to just a simple staff mistaker that caused some kind of liability event. Just a couple more slides, guys. On the left-hand side, I won't go into all this, but you can see the different types of data caught up in these events, anywhere from PHI to PII to what policyholders and claims professionals consider critical business files, that kind of a thing. And on the right-hand side is an actual breakout of the SME pool, anywhere from nano to micro to small revenue. Nano, it looks like Nano was leading the pack for less than $50 million in revenue, were the largest part of the population in this study. Again, if we looked at the all-in average, it was for an SME, it was about $92 million in revenue. The very last slide here is a breakout of the sectors involved in these events. Looking at you'll see in our deeper study, our actual report, it seemed like to me every business sector out there had a slice of this thing, especially in the ransomware area. Healthcare, professional services, retail, manufacturing, financial services, and so on. Everybody seemed to be getting caught up in this, all these sectors. Ransomware led the pack again. This is the second year for the cause of loss, followed by hackers and staff mistakes and business email compromise. Those are all leading causes of loss.
Great, Mark. So I can tell you from our perspective, 2020 has been a wild year, separate and apart from experiencing the pandemic that we're experiencing. We agree with everything that you've said, Mark. We are seeing events hit all sectors. No sectors are immune. Very strong criminal component in every single matter. Gone are the days of a lost laptop or inadvertent disclosure, although we get one of them every once in a while. The attacks that we're seeing, they're much more sophisticated. Data exfiltration is now becoming a normal part of the events that we're seeing, and the legal framework is just much more complex, and it's ever-changing. So we agree with everything that you've said from Mullen Coughlin's perspective. Kim, how about you from your perspective? What does your 2020 look like so far?
Well, our data is certainly in line with the NetDiligence data to the extent that we're seeing similar trends, industry segments, and revenue bands being hit. In terms of the types of claims and the trends, it's all about ransomware, fraudulent wire transfers, and business email compromise. With respect to the sectors, we're seeing smaller and middle market companies being hit the hardest, with the healthcare, professional services, education, manufacturing, and public industries the hardest hit. Part of the issue is that the cost to contain and investigate a ransomware event are up sharply in the last 2 years. That correlates with the more targeted attacks that we're seeing and the presence of persistent malware that needs to be contained. In addition, forensics are needing to do longer investigations because we are seeing evidence of unauthorized access and potential breach, and we need to investigate where the bad actors have gone in the system, what information they've accessed, so that the lawyers can determine whether there's a notification obligation. And when there is, costs increase because the lawyers have to spend more time drafting letters, drafting the frequently asked questions, that come in when companies have to publicly notify. They have to notify regulators. And then, of course, we may have crisis management costs, and we might also have credit monitoring or identity monitoring, depending on what information has been accessed. Once a breach is public, we then have potential for regulatory investigations and class action litigation, which is not something we were seeing 2 years ago in connection with ransomware events. Class action litigation in connection with ransomware events is up sharply, and we have seen it not only in situations where companies have gone out and done a public notification, but also in situations where there's no data breach, but it's become public knowledge that the company suffered a ransomware event. There's certain very enterprising plaintiffs' class action firms who are troving the media and they're troving the shaming websites to see evidence of companies that may have been hit by ransomware and file lawsuits.
Thank you. Okay, and on to poll question number 2. The question is, the average ransomware payment in the last 12 months was less than $100,000, between $100,000 and $500,000, greater than $500,000, or greater than $1 million. Okay, so additional content for today's presentation. We are going to talk about some trends that we are seeing that Mark highlighted and Kim and Luke just spoke about, 2020 incident trends, and we boiled them down to 3 buckets for purposes of this presentation. The first being avoidable events, such as business email compromise, social engineering, and funds transfer fraud. The second bucket being third-party events, and the third bucket being ransomware events. Luke, on avoidable events, from your perspective, what are you seeing regarding these types of incidents, including the types and the losses?
Well, I find it amazing these days that how much social engineering fraud or invoice redirect fraud, fake CO fraud we see hitting cyber policies, notwithstanding all the awareness that's out there, that employees are not just checking payment details properly when bank accounts are changing. And it's not just in businesses that do this infrequently. We're talking about routine businesses. We have a facility in our book which is heavily involved in property purchases in the U.S., so title agents, estate agents, lawyers that do the property transactions themselves. And they are constantly getting hit with social engineering events. That means that they've paid money to the bad actors, that money is not getting recovered, although banks are getting better at that if you tell them early enough. But it's just a very simple thing of call back your contact that sent this to you using a number that you already know from them and say, did you change your bank account details? And, from a technical, so that's a, education piece. I find that maybe it's still there, but it is very avoidable. And as far as a technical side, it's still amazing to me how many insureds don't have multi-factor authentication involved on their remote access systems, including their email accounts, even though that feature is widely included free of charge in most operating systems and email cloud-based platforms are out there. And then following on with, if you are using a cloud-based email platform, just ensure that don't turn on the detailed logging, which means that when you have an event, this is what I was saying before about preparedness, when you have the event, if you don't have the detailed logging turned on as one of your settings beforehand, then when you're doing the investigation, the investigator are limited into what they can see. They're limited in what they can conclude, and it often ends up that the results are, we know the bad actors have been in your system, but we can't tell you exactly what emails they have or haven't seen. Therefore, the advice that comes back from counsel is often you have to assume that the bad actor saw everything. Versus if you have the detailed logging involved, you can say, well, they saw this email, this email, this email, and you only have to possibly notify and talk about 3 specific individuals. I don't know if that's similar to what Kim sees, though, as well.
Yes, certainly I agree with everything you said. I mean, fraudulent wire transfers are the easiest claims to avoid, in my opinion. And it really comes down to employee awareness and training. If you receive a request to change wire details from companies that you pay with regularity, pick up the phone, call the person you know on the other end, and confirm those details. Tell your vendors to do the same thing if they receive an email that they think is from you, telling them to change your wire details. If you receive a random email from your CFO telling you he's in China working on some big business deal and he needs $10 million wired to him to do the deal, pick up the phone. You know, those are really the way that these things go down, and it's really all about, as I said, employee awareness and training. And then from the other perspective, when we look at ransomware, RDP vulnerabilities and software vulnerabilities are the two leading causes of ransomware attacks that we've seen when we're looking at threat vectors and we're trying to track that. So this is all about patching. This is all about closing those open RDP ports, not making them accessible. The bad actors can see that from looking from the outside. They're searching for that, and then they're targeting your company. These attacks are not as random as companies would like to believe. They're targeting you because they see you have vulnerabilities. And then, of course, you mentioned multi-factor authentication. That is the leading cure to business email compromise and other system vulnerabilities.
Thank you. So the next bucket is third-party events. So these types of events may be double the fun depending upon the position the data collector or business associate takes. So Kim, from your perspective, what's the true impact to a data owner when a data collector of theirs experiences an event compromising the security of the data owner's data?
Well, there's financial, reputational, and resource impact to companies, and vendor breaches are always really tricky. First, despite what your service level agreement with your vendor may say, the vendor who's collecting or holding its client's data may wait days, weeks, or months before telling its client about the breach on their end. This is a really bad way to start out. First, the clients are left scrambling because they have timing requirements to investigate, potentially notify their customers or underlying customers, patients, employees if it's determined that the data exposed in the incident triggers a legal obligation. And the vendor likely has made public statements about the incident, leaving the poor clients to have to say, okay, should we go out and say something? Should we put a holding statement out there? And we have one now where the vendor went out publicly. It wasn't necessarily known that that vendor was what was sitting behind a lot of their clients' business, but some felt very compelled to go out with voluntary notifications before they even really understood what data of theirs was impacted by the breach. And the vendor, trying to get that information out of the vendor, was very challenging. They weren't being very forthcoming, and they waited 2 months before telling their clients about the event. So that really put them in a challenging spot from a reputational standpoint. They had to incur their own costs to hire legal to tell them their obligations. I mean, sometimes the vendors are willing to do that for you. They're willing to sort of take on that obligation. Even in those situations, though, we do recommend to our insurers that they hire their own legal counsel to make sure their interests are protected. And then from a resource perspective, when your vendor has a breach and it impacts your data as their client, it's all hands on deck at your company too, right? Until you figure out what's going on and you're dealing with the crisis and you're dealing with potential notification obligations, it's a really big resource strain. I don't know if Luke and others are seeing the same thing or have the same experience.
Yeah, I think you're absolutely right. We have seen, first of all, as insurers, we talk about data collectors that are outsourced vendors for insureds, that are the ultimate data owner. They're not their point of aggregation and their risk. And I think there's a lot of insurers that we need to all work as a market to identify and discuss and analyze that aggregation risk. Because what we saw in 2020 in the press, so I can't say anything that isn't in the press, but Blackballed was a major data breach that affected a number of educational institutions, charities, even the Boy Scouts of America used Blackballed. But how each of the individual clients of Blackballed used the data, and this is coming across any sort of aggregation service like this, what they were putting in the system and how they were using it can vary significantly. We've seen in some cases where all the data that's been held has been fully encrypted or was not data that would be classed as vulnerable or harmful. Therefore, there was no need for the data owner to make any notifications to individuals. On the other side, we've seen people using these systems inappropriately, using comment boxes to store sensitive data about medical conditions of children or parental custody disputes, or using picture image storage fields within some of these data aggregation databases to store photographs of passports, driver's licenses, or other identity documents, things that the system wasn't designed to do. And as a result of that, the individual data owner's liability versus the liability of the platform provider or outsource provider can be significantly different. We also need to bear in mind that whenever their insurers are using these systems, the system provider is the one that's often written the limitation liability clause, which may absolve them of any liability that is within that data set. Putting it back on the data owner to analyze it all, incur the cost of investigating, but without access to the system itself to understand how much may have been analyzed, which puts investigation difficult, makes the cost more difficult, and leads to a lot of speculative advice as to what should be done for insureds. And I think ultimately that leaves the insureds in a quandary of what do you do? Insurers, we can't necessarily advise them because we don't have enough facts to tell them what to do except to take a cautious approach in each case.
Simon, from your perspective, what are you seeing regarding third-party events?
Yeah, it picks up nicely with something Luke just said there. For us, it's the challenge of the investigation. I mean, as soon as there's a third party involved, it just changes the landscape dramatically. It goes back to what Luke had just said, is the access to the sort of information you would want. You know, our role on the damages measurement is to always make sure, rather than just look at the damages sort of in an isolated state, really understand and link it to the events, the cause and effect of what's happened, and then what does it mean financially, and join those dots. And, you know, a lot of that is, you know, you can get perhaps the first party, you know, the client's the insured's information directly, but you can't necessarily get the storyline and the landscape behind what happened to be able to really fully join those dots and identify cause and effect. So, without a doubt, I mean, it happens across many lines, really, that we get involved with, and that third-party element just changes everything pretty dramatically as far as how the claims process is really going to be handled, and the speed as well with which, one, recovery can take place, and two, the claims process itself and the investigation.
Yeah, and from our perspective, we're seeing a shift on the regulatory investigation and litigation side relating to third-party events as well. So we represent several data owners and covered entities that are impacted by an event at one of their third-party vendors. And we, as the data owner and covered entity, needed to do certain reporting as a result of the event that the vendor experienced. And we are seeing regulatory investigations launched into the organization, not only relating to the event that they had, but their overall privacy and security practices. So not only are you seeing the first-party exposure on the insuring agreement, the first party, but also the third-party side as well, rising from these vendor incidents that can be very problematic. So last but not least, ransomware. So I know we talk about ransomware every single year at every single conference that we have, but it is still very much a problem, possibly the biggest problem it's been so far. The way that the attackers are getting into the networks, exfiltrating data, the threats of publication. We've seen defaults on payments made and publications still happen. So Mark, before we jump in, can you remind us what your claims study showed regarding ransomware?
Yeah, Jen, and as you said, the underlying facts to these things just gets more fascinating every day. You know, we're reading some of the case facts in our claim study, and you have threat actors calling the victims their clients. So they have their own, you know, lexicon going on now. If you look at our most recent study, the numbers are pretty fascinating. For an SME, the Bitcoin payments alone more than doubled, from 72,000 to now, on average, 175,000. And the all-in cost, the cost for someone like yourself, Jen, a breach coach, counsel, and the forensic investigator to assist the client, to fully recover went from 91,000 last year to now 275,000, so more than tripled. Which is, and as Kim mentioned early on, that doesn't tell the complete story. A lot of our carrier partners are seeing, 7, 8-figure claim payments, and that can be for a small organization or medium-sized organization. Doesn't mean you have a household name company, and then those are the large demands. We see some small organizations facing multi-million-dollar threat actor payments, and they can't figure out why. And it's just something they got caught up in this thing.
And Mark, NetDiligence has a ransomware advisory group. Can you speak more to the membership and what's discussed at these meetings?
Yeah, so that's been very interesting to learn from some of the leading experts. We have a group, we meet every month or two. It's what I think are probably the top 20, 25 incident response forensic investigators in the world. And many of the folks on our panel know these guys. They're great. They're very forthcoming. And our goal essentially is to pull out from them during in-depth discussions, what are they seeing in the front trenches. We originally started this because we, in talking to these guys at the NetDiligence Cyber Summits, we realized they need a group amongst themselves just as a sounding board where they can share stories, what they're seeing, some problem cases that they're seeing. And we took it as a chance to learn from them what they're seeing, build out these reports for our insurance partners so they can learn from these experts. Some of the newer things that they're seeing, and we touched on some of this during this call, is the current variants. The different kinds of threat actors behind the variants are getting much more aggressive. They're taunting the policyholders. They're sometimes even making physical threats against them. We see some claims where the policyholder literally went out and hired armed guard services. It was that threatening to them. The variants themselves are much more complex and difficult to eradicate and fully remediate, even though if you get the decryption keys from the threat actors, according to these experts, they don't always fully decrypt everything. Some of the files, some parts of the system still remain encrypted, or the data is corrupted in some ways. The other issues we learned about, especially facing SMEs, is the failure of backups. You only have a couple of paths you can go down when you get when this ransomware screen is facing you and instructing you have a certain amount of time to make this payment, or they're going to start publishing your information or auctioning off your information to the world. So you can either make that payment, or you can just say, we're going to just ignore this and we're going to restore from backup. What we're learning is 50 to 80% of the time the threat actors already gotten to the backups of the organization that they were trying to take down, which is a shame because we asked these experts about business interruption and downtime. And what's more efficient? Is it more efficient to pay Bitcoin or just restore from backup, assuming you have a viable backup copy? And it's clear restoring from backup is the preferred path of all the policyholders, all the experts, and of course the insurance companies. But that's not always viable. But if you are able to restore from backup, business interruption, according to these experts, is about 1 to 10 days. If you went down the Bitcoin path of paying, that extended the business interruption 3 to 15 days on average. And I asked these experts, why is that? It didn't make sense to me at first. And they said, the reason is a lot of companies don't have the liquidity to go out and quickly get $100,000, $2 million in Bitcoins. They don't have the authority to do that. Sometimes it takes them days, even a week, to kind of get that authority together. That extends the business interruption, is the bottom line. And then you've got to enter into lengthy negotiations with the threat actors, and then you get the decryption key, and then you hopefully, it unlocks your data. It's just a more complex process in the big picture. And again, we asked the experts, what are some of the more severe cases they're seeing? We know the average Bitcoin payment is, a couple $100,000, but what are the more severe? In their eyes, all these guys, all 20, 25 of them, were seeing regularly $500,000, $1 million, $10 million. I mean, and this collective group probably have several thousand ransomware cases under the belt. So it was interesting. Jen?
Yeah, we've seen in the past year skyrocketing demands. I mean, the demands are frequently in the $1 million range. close to 10 million, sometimes even more than 10 million. And even though we sometimes see the threat actors being willing to negotiate, even negotiating down 50% from a $10 million demand is still a $5 million payment. So we've seen skyrocketing demands, skyrocketing payments. We've also seen the threat actors, members of the threat actor group go rogue. So we make a payment and then somebody comes back from the group saying, we know that you paid the group, but I have access to your data, so you need to pay me too, or I'm going to publish it. So they're re-extorting the victim organizations. And we've seen organizations have their data published months after they made payment for the key or for a promise that they're not going to publish. And we've seen the threat actor groups band together. So we now know there's a cartel out there, a maze cartel. So when you have an event coming in as Ragnarlocker, you're not just considering Ragnarlocker, you're also looking at the maze blog, you're looking at the intel you have from the maze actors, because Ragnarlocker is part of the maze cartel. So Luke, what do you see as the potential timelines for ransomware?
Yeah, I think there's a good myth to be debunked in this. Paying the ransom is kind of the preferred route or the best route to go, because it really, really isn't. The kind of as a short summary, there's kind of two different timelines that and again, Mark kind of stole a little bit of the suspense on this one. It's a lot faster if you can remediate your systems by just restoring a backup. This is, of course, is predicated on the idea that you don't have data exfiltration. In some cases, that can be the real reason to be paying a ransom is this threat of a data breach and the attenuate third-party liabilities that can come from that publication. But if you have good quality backup, then you can take that first path on this slide, which is to simply identify what systems are infected, identify and inspect your backups, make certain they're intact, make certain there's no virus on them. You wipe clean any infected systems, and then you simply reinstall your systems and your data from the backups, because if you have good backups, it will also have all your systems files and settings on them as well. So it's a fairly swift process, and Mark kind of estimated on average 10 days, 2 weeks, somewhere around there is probably about right for most small, mid-sized companies. Even larger companies, they don't take that long because they've got more people they can throw at the problem. So, 2 weeks, maybe 3 for a large multinational, entirely doable. But if you have to pay the ransom, because when you get to that green step of identifying and inspecting your ransom, your backups, which bear in mind, the first 3 steps are exactly the same. If you identify and inspect your backups and they're not there, they're corrupted, they were never done, we've seen that done, especially with outsourced providers that are meant to be contractually obliged to do your backups, but they never actually set it up, or someone never turned the software on, then you don't really have any other option other than go without the data or pay the ransom. And when you do that, you have to still reinstall your base systems, which is that 4th step on the bottom line, but then you have 2 additional steps that you wouldn't have before, which is to negotiate and pay with the hackers. That takes time. That takes time to get the money together. And then once you've paid and you have this key, there's another myth, I think, out there, especially for people that haven't been a victim of one of these attacks before, that the key magically gets you up and running. It's not like the key to your front door. The key allows you to run your decryption program, which is that 6th step there. That takes time. That can take weeks, depending on how much data you have, to run the decryption. And then only once you have your decrypted data can you load that decrypted and cleaned and scanned data back onto your systems, and then you're back up and running. So paying the ransom could be a longer, not faster, method of trying to restore yourself. So the key for any insured really is good quality, secured, air-gapped backups will help as long as we're not concerned about any data exfiltration, which is, of course, the caveat that the hackers have been developing in the last 12 months or 2 years, I think is probably about the time we saw the first ones of these.
Kim, from your perspective, what does an appropriate investigation and response to a ransomware event look like?
Well, there's really multiple stages, and some of them really work kind of at the same time. And the first priority is containment. Actors are out of the system. You want to get forensics in there almost immediately. The second priority is getting the company back up and running. And so we're sort of doing 1 and 2 at the same time. The third priority is to have a breach response investigation to figure out whether there's been data that's been accessed in an unauthorized way and potentially exfiltrated. And is once the dust settles, trying to assess the financial impact. And so in those early days, we really do try to do those first 2 stages at the same time, bringing in forensic, bringing in legal, negotiator, and working dual track, simultaneously with the bad actor and engaging with them, and you do need to pay the ransom at the same time ability of the backup. Some companies at first blush say, oh, our backups are here, they're fine, they haven't been encrypted, they haven't been touched, they've been backing up regularly as they should. But then when we try to actually restore from the backup, they realize that there's so much data impacted and locked down that it will take a very long period of time to actually restore from the backup. And that's very unfortunate because there's no point in having a backup if it's going to take you weeks or months to restore from your backup. So to add on to what Luke was saying earlier, it's not just having those backups, it's not just having them air gapped, but it's potentially learning to work and work quickly when you actually need them. Then, obviously we need to get to the breach response investigation, but the forensics first responsibility and first priority really should be containment, because whether you're restoring from backups or you want to make sure the bad actors are out of the environment's clean, so you're not introducing good data. And, again, once the dust settles and the company's back up and running, there's a lot of hard work that's going to go into assessing not only the data restoration costs, but the business income loss as well. And that's something that Simon's firm and other forensic accountants are heavily involved in.
And Kim, the million-dollar question, to pay or not to pay, what do you see organizations consider in making this decision and the timeline for the decision?
Well, to sort of clear up a false rumor out there, the insurance companies don't make the decision for the policyholder. So it's the policyholder alone that's making that decision. And they're doing it after considering the things we've been talking about. Do they have any alternatives to getting back up and running? Do they have viable backups? Do they have, that was offline somewhere that may have the DNA to their network infrastructure that they can rebuild from? And, do they need the data? Is their whole system just a portion of their system, and is it actually data that they need to conduct business? We sort of refer to it as mission-critical data. So those are the decisions they're making. It's really a business decision for them. And there's also legal considerations as well. We're seeing examples now of debate about whether paying certain strains of ransom is legal under U.S. law. So there's a lot that goes into it. And again, the policyholder needs to be consulting with data restoration experts, consulting with legal to determine the best decision for them under the circumstances.
And Luke, any additional color on the role of the carrier in the discussion and decisions about payment of the ransom by your insured?
Well, I think there's always been a question over the legality of indemnifying or paying a ransom. I mean, paying a ransom itself, where in most jurisdictions around the world, there are a few exceptions, it's not itself illegal. It's who you're paying the ransom to, whether that payment is contrary to any OFAC or other sanctions. For example, we have the Terrorism Act, Section 17A, which as an insurer, if we indemnify a payment which has gone to a terrorist entity, where even if the insured has made the payment or a vendor appointed by the insured has made the payment, if we're anywhere near that sort of payment, we as an insurer can be guilty of offenses. So there's always been a need to conduct a due diligence on that payment. I think that goes back to the role of the insurer. The role of the insurer should in part be to ensure that if you are going to be heading down that route, that appropriate vendors are being engaged, people who are familiar and experienced in this arena, so that they can help to ask the relevant questions and conduct the relevant due diligence to ensure that no one is violating any of these prohibitions that are out there. Secondly, as an insurer, I think Kim did a great job of pointing out very clearly, this is the insured's call. Insurers should be there as someone who's a voice of reason. We do these, we've, both Kim and myself, I'm certain we've done between us thousands by now probably, where we've seen so many of these events that we don't get panicked by them. So we can give that voice of just hold on. What other options are there out there before you head straight down this road of paying this ransom? But equally, one of the things I've been encouraged over the last 12 months by insurers has been an increasing number of insurers that say, we don't want to engage with the hackers, we don't want to pay the ransom, we're just going to say goodbye to the data, we'll restore whatever we can, we'll reconstruct things from paper file. Insurers, will you support us in doing that? And I have a number of times said, yeah, sure, we'll do that. Even if it means that it costs more than would have been done to pay the ransom, because if that's what the insured wants to do, and that's how they want to do their policy, the only thing we as insurers should say, well, is that a reasonable response? Well, yeah, it probably is, because why would we as insurers be willing to tell an insured, you must pay criminals? That's not a conversation I think any insurer really wants to be trying to have with an insured. So we'd rather be aligned with the insured when making the decision to pay or not to pay, but making certain they just take the time to consider all the different facets of their decision.
And I think just to contribute to what Luke's saying, and was said a little earlier there, Simon, speaking on the damages side again, and it's this belief perhaps that you pay the ransom, get what you need, flip the switch, and the business interruption stops. We go back to normal at the flick of the switch. And I think our experience, and I work with the technical team internally that are looking at the backups and so forth and all of that part of this process. And that seldom happens. It's really not as slick as that in many cases. And so that trickle effect and the BI that continues even after the ransom's been paid is actually maybe not anticipated, misunderstood, and so it isn't necessarily a step that immediately mitigates that BI loss. So I think certainly our feeling is, it has been mentioned here already, that the insureds themselves getting in a place and a position where they don't get left feeling that because of the quality of the backups, because they've tried and tested them, they don't get left feeling that paying the ransom is really the only option and the only decision they can make.
So I'd love to get everybody's thoughts in 30 seconds or less on their perspective, given the 2019 article that I think everybody's familiar with, that implied insurance companies may be fueling a rise in ransomware attacks. So that came out in late summer of 2019. Here we are, almost October of 2020, October 2020 at the time that this presentation will be played. Mark, from a claims study perspective, what are your thoughts on what has happened since that article came out?
Yeah, Jen, so we asked the actual ransomware experts, guys, in our group, the top 20 forensic guys, what they thought about this. And pretty much all of them were in unison saying that they absolutely do not see any evidence that the cyber insurance industry is fueling this. They see of thousands of cases, very few of the threat actors were conscious of cyber insurance. Now, truth be said, there were a couple more recently where somehow the threat actors did find evidence of insurance and used that in their negotiations. But it's very much a minority, and pretty much all the experts said that they don't see it that that cyber insurance is at all fueling this.
Simon, how about you?
Well, it's interesting. I feel that one of the things it doesn't touch on, that article, is the situations which we see a lot, where actually the insurance limits purchased aren't enough for the problem that the insured faces. In other words, the suggestion that the decision on the ransom being paid is all for the benefit of insurers to avoid costs, etc., avoid the BI perhaps. It doesn't really address those situations where even the limit available in making that decision, there's still a heck of amount of uninsured loss in many of these situations. So the decisions being made are really bigger than just what's the insurance policy look like. And as Kim has pointed out, it's the business itself that needs to sort of make that decision, make that call, what's the best for it going forward. And I think a lot of that is down to its confidence, really, in its own backups and its ability to restore. So, yeah, I think it misses a couple of situations that exist out there, and the idea that the decisions being made all in the interest of the insurance companies is obviously a little misguided.
Luke, how about you?
I don't think insurance is really the factor here. At the end of the day, there's enough companies out there that have paid big ransoms that have not been insured. The issue here is these attackers that have managed to find a way to leverage money out of companies. And, whether the company has that money to make that payment either through their own cash reserves or through an insurance policy is not the issue. It's that these hackers have found that they're successful and found that because they're successful, they've gotten increasingly more brazen in their attacks, and they found, each time that a company pays a bigger ransom, that's what's fueling the increasing demands potentially, in my view, because if you've been successful at getting $1 million out of the previous company, why don't you go for 2 on the next?
Kim, do you agree?
Definitely, and we have to remember this is criminal activity, and putting the blame on insurance companies for that activity is really unfair, especially when our industry has done so much to increase awareness about cyber threats and provide risk management tools to our insured. Insurance has always been about risk transfer and protecting the insured company from going out of business if they experience some type of adverse event, whether it's a cyber event, a general liability event, whether it's a faulty product or an unsafe condition. So blaming cyber insurance for the rise of ransomware would be like saying the presence of general liability insurance is fueling plaintiffs' bar to file slip and fall cases or product liability cases. And it's really unfair to make that association, at least in my opinion, certainly the opinion it seems of everyone on the panel today.
Yeah, and just to finish off on this a little bit, I think if the lawmakers and regulators considered that insurance companies were part of the problem, there would be a very easy way that they could stop this. They could simply make it illegal to indemnify any ransom payment on insurers, and then insurers would just have to pull that part of the coverage. And I don't see any regulator making any moves to do that anytime soon.
That's a great point. Okay, let's move on to some information that may give us all some hope, even if just a sliver. So is a data privacy event inevitable? I think most say yes. Some events are more easy to avoid than others. But the quote from a few years ago that everyone used ad nauseum was, it's a matter of if, not when. So do the events that transpired in the past few years support that statement? Possibly, absolutely possible. Simon, what do you see organizations doing now before they experience an event to better prepare for responding to one?
Yeah, this is an area where I'm feeling pretty good, actually. I think there's definitely an increased awareness, driven, as Kim points out, by what the insurance community has done for businesses to make them more aware of the problems, but equally put resources in front of them. And, we're talking in the study about the small, medium-sized enterprises that don't have resources, and that is, their challenge. But, the trend we're seeing for sure is, companies more interested in knowing, they know a lot about their security systems, they know a lot about cyber, they know a lot about the events and the potential risk, but we certainly see from the financial side, there's a connecting of the dots now more often where those entities in preparing for this are saying, so what does it mean financially? What will it mean financially? And just starting to at least look internally at, the risks financially that they're exposed to and try and put a number on that really so that they can make a better decision about, what investments to make and how to sort of tackle the cybersecurity risk. So I'm feeling pretty good about that. I think there's sort of a message getting through that there's things that can be done, not just on bolstering cybersecurity from a technical standpoint, but at least understanding financially why that's important. So I know we've been asked more and more over the last 12, 24 months to get involved in that kind of activity really is, can you help us understand what the exposures are from a financial level? It does need a willing participant. You've got to find the right insured that's genuinely interested in getting into that. But there's certainly a trend that there's an increased frequency in that sort of conversation from our perspective.
And Kim, what is the role that the cyber insurance carriers are playing in this, in preparing for what is arguably inevitable? And should they play a bigger role?
Well, certainly we're helping to introduce our policyholders to vendors like Simon, vendors like forensics who can do pre-breach work. Simon alluded to this, doing some type of pre-event consulting to understand what your losses would look like if you're down for a day, a week, a month. I think if more companies did that in connection with their business continuity planning, they would appreciate more what this type of event is going to cost them. It might help them to convince their boards of directors or their top management to put more money towards cybersecurity defense. And that's really critical. We've always had, sort of for 10 years now, right, pre-breach services around talking to legal in advance to understand, where your data is and what, your obligations might be. We've had forensic pre-breach services around penetration testing and how secure is your network. But then, taking that to the next level is really bringing in those forensic accountants in advance, bringing in people who can really help you map your network infrastructure. So many times in these events, we have clients who don't understand their infrastructure. They haven't mapped their network. They're not sure where all their data sits. So when a portion of their network is down, they're not even sure what's been impacted. And, how can they even segment their network if they don't understand the infrastructure of their network? And so those things are really critical. And I think people need to appreciate that an incident response plan, what you're going to do if you have a run-of-the-mill data breach, is very different from a business continuity plan. They really are two separate types of plans, and there's really different experts that you'd want to bring in to help you with that planning.
Luke, from your perspective, any additional comments on the role the cyber insurance carriers can play in assisting organizations in preparing?
I think Kim's done a really great job of summarizing a lot of things that as insurers we're all trying to aim for. One additional piece we haven't really talked about, because the claims thing, is the contribution that underwriters make to this. When insurers are coming into the market and the broker is bringing that policy around, it's having a good quality questions from the underwriter and the insured really thinking about those questions, because underwriters aren't asking them just to try and work out how much premium to do. They're looking to see what sort of risk you are. And if you can answer those questions and really think about them and really have the answers, not just yes, no, then you're probably going to be more likely to be prepared for the next event yourself. So it's kind of work for yourself correctly on answering the proposal form questions.
Thank you. So before we move forward to closing remarks from the panelists, the final polling question is on the screen. What is not classified as personal information under the CCPA? Biometric information, professional or employment-related information, geolocation information, or all of the above are classified as personal information. Thank you, everyone, for joining us today. We got some great insight from our panelists. So we are going to wrap the presentation up with closing remarks. Kim, we will start with you.
Well, I think at the end of the day, companies really need to take these threats more seriously. They need to take advantage of the threat intelligence and other risk management measures they're receiving from their insurance carriers so they can make themselves less vulnerable to these attacks.
Simon?
I'm feeling pretty positive about the conversations I've been part of, so I think progress is being made. I think we're getting the resources as a community in front of the small businesses, and I think that's critical based on Mark's studies, so I think we just keep it up.
Luke?
Yeah, I think it's a positive development in terms of some of the technical steps that have been made, better backups, multi-factor authentication. But let's all please keep on educating employees. Let's avoid these social engineering frauds and try and starve the hackers of that source of funds.
Last but not least, Mark.
So, Jen, I would say for clients out there, large and small, you can't outsource your liability. Things that we talked about today, like ransomware, does not discriminate. Large, small, any kind of sector, they don't care. I would say to clients, make sure you have an actionable incident response plan that you can use and get to at 8 o'clock at night on a Saturday, and lean on experts that your insurance company makes available to you, like yourself, Jen.
Thank you. And unfortunately, we are out of time, but I'd like to thank our panelists for their tremendous insights on claims and losses for 2020 thus far. Mark, Kim, Luke, and Simon, thank you very much for all the information you provided today. We will not be able to go to the live rollover for Q&A, but if you submitted questions that were not already handled via text, we will be following up via email. Additionally, as the presentation concludes, you will see the results of today's poll questions. Thank you again.